Hello, everybody. This is Sarah Colato of Architecture Talk Tongue, and I've got a great guest today, Ondrej Slunecko, that is joining me to talk a little bit about his passion for investing as an architect. I'm really excited to have this topic because, first of all, I really love to meet people in architecture that are diversifying, that have other interests, but architecture solely, and also looking at um, various business models, for architects to get into and what's interesting. And I really believe that developing passion for finance and learning about financial matters is extremely important nowadays. We live in a information era, and it's time where obviously education is becoming very available on every topic. But I think it's really important to educate ourselves on topics also that were perhaps not taught at school, and business being one of those for architects specifically, and finance is like that area of business which is really worth exploring because it has so much potential in it. So Audrey, thank you so much for joining me today, and let's have that conversation about finance. And tell me a little bit about yourself, and tell me how you developed that passion for finance and investing, whilst being an architect at the same time.
Yeah, definitely. Well, first of all, thanks for having me. It's a pleasure. And yeah, so let me just kind of briefly sum up what I've been up to, right? Because obviously, you are very much engaged in this topic of architecture, alternative sources of revenue, income, and I would say for lots of architects, it's kind of born out of necessity, right? Because we definitely know that it's very often tough to almost make a living as an architect, right? Especially during schools, the hours are long, and it can be pretty demanding. But at the same time, architects are really primed to you know look a little bit below the surface and then be uh, basically find a ways how to make things done. So obviously when I started school, that's already couple of years back, I always needed to take care of myself to some extent, right? So besides school, I had some other various part-time jobs. So I and since basically now I live in Denmark, but I originally come from Czech Republic, right? And I came right after the high school, which meant I kind of needed to take care of myself from like the day one. So I was always like super cautious about my finances and keeping track of everything. And so that means that at some point, during my bachelor degree, I basically stumbled upon possibility of investing in basically US equities in American companies. Let's say we could be talking Google, Facebook. These are kind of the big names that everyone can think of. But of course, there are so many different companies, many of them also connected to architecture as well. So basically, I started investing around late 2017. So whenever I had some money left over at the end of the month, I just kept investing them to create a little bit of security over time. And obviously it starts as a like a small side hobby. But if people are consistent, the like consistency is really powerful, and it can compound to like very interesting um, number, basically, as long as people know what they're doing. And I've been following basically one American investor, YouTuber, basically since I started, right? And at one point, he basically was, kind of giving an employment offer, and I have applied for like helping him manage his private group of investors. And I've been basically working there for the past year and a half, kind of helping him to run stuff there. And
Interesting.
so that's basically, I'm at this point where I'm having like two simultaneous careers
Well,
almost.
yeah, it's interesting.
Yeah.
No, absolutely. I mean, so first of all, I think because I myself have definitely wasn't like naturally investing money. You know, I come from a middle class family. My parents have not been thinking in these ways of like building a financial future or freedom, and so it's something that I also got through education to understand the importance of investing. And it took a certain mind shift to start thinking about that in such way that you are investing in your future, and also to begin to educate yourself more about the markets and the economy, and obtain more, so to speak, education on finance. How did you find that process to be for you? I'm curious, especially from like mindset changes,
Mhm.
changing perspectives.
Yeah, as I kind of mentioned, right, it was a little bit of a necessity. But then again, I would say architects are very much, I would say being an architect at the same time made me a better investor, and vice versa, because obviously
Interesting.
architects are always, uh, thoughtful about the what's happening generally in society, what are the trends, how people might live, how the what's kind of ahead of us in the future, right? And able to spot some of those big trends. Let's say,
Mhm.
obviously some of the topics that come to my mind now these days is, let's say, electric vehicles, uh,
Mhm.
changing shift in the diet more towards the vegan, vegetarian, and some of these like big societal changes can be very much connected with the investing, right? So and when you are an architect, you are always looking these like 5, 10 years ahead, and this similar mindset is with investing, right? Because you are
Mhm.
kind of uh, basically providing capital to that company, and the only thing you need to make right, as long as you are kind of a long-term investor, with the mindset of, okay, I will put my money there and just let it there compound for a couple of years, then basically the only thing you need to get right is that trajectory, that you will invest in a company that will do better over time. But of course then
Mhm.
there are different levels, and it depends how much time do you want to spend with investing, how much time do you want to spend with the research, and then it of course kind of influences how much you can gain, because obviously you know s- uh, in a sense it can be very simple. You, as an investor, you can invest in, let's say, indexes, S&P 500, right, which is tracking the
Mhm.
whole US economy, or you can choose an invest index which tracks the whole world economy, and just put the money there and don't think about it at all. And that's very simple, but then again, you could expect somewhat limited gains each year. But again, you will eventually get to a point where you can definitely, let's say, achieve some financial freedom relatively further down the road, but still achieve that. But of course, if you spend more time with it and look for companies with a little more kind of asymmetric risk reward profile, then you can do obviously much better than that. But of course it costs that time doing the research.
Yeah, absolutely. So obviously investing can be another job, and I don't mean by actually like a monthly paid salary job, but with a future return on investment, it can become sort of a passive income source. It takes that level of education, but I also think that a big step for someone who is employed is taking actually a percentage of your salary, monthly salary, and putting it into that investment plan. How did you find that shift? Was that easy for you to do? Did it come natural, or did you find like perhaps you're putting this money at risk? And the very beginning of when you move into investing, you really look at the money that normally you would probably spend on yourself when you make a monthly salary, as going away to somewhere unknown. um, so how was your experience there?
Yeah, I can definitely imagine that. For when I was really starting that, let's say, the first year, I was very much in this like learning mode, kind of trying to find as much resources as possible, watching some people on YouTube, let's say, reading lots of books, and just kind of trying to understand the whole principle, understand the risk reward for like the market in general, how everything works. Um, and at the very beginning, I was also, relatively, I would say, cautious. uh, During my first year, I invested most of my money, around half in index fund, and then basically the first individual stock I bought was Apple, right? Which that's like super well known company. Like majority of people are using the iPhones, they are buying new iPhones every year. So at that point, I didn't know much about kind of the valuation and some of those more technical stuff, but I just understood the product in general. So I kind of understood that the company will most likely do better over time. But of course, the more time I spent with it, the more comfortable I got with putting my money there. And also, then I was able to basically look for companies which are not as traditional, right? And over those 4 years that I've been investing, I've invested in about, I would say, 20 companies in total. And with each of those, it's a little bit of like the extra level of research. And as with everything, right, as you are putting the hours in, you get more knowledgeable and more confident with your own abilities.
Yeah, they say that you need to invest 10,000 hours to learn a good chunk about a certain topic. So I'm sure it gets you into more of an expertise the more you study it. But I certainly believe that it's extremely important to learn about these things and think about your financial future and about investment future. Because most of architects, no matter at what position we are, whether we are senior level or normal employees. We are working on monthly salaries, and a lot of times we pay really high taxes on these salaries. And obviously, we know that globally our industry is underpaid and undervalued, so that also influences. The way that we can actually see the money that comes in from that. Is it enough to pay for your accommodation? Is it that all you spend is going only into your living expenses? Are you thinking at any level really of building something else out of it? And I certainly think that even at a very minimal salary, one can start building a financial future by looking into topics of investments, because, as you say, first of all, the compound effect is a very powerful thing that is very real, and it does grow over time. And second is, I think that education, it really matters, because even if in the very beginning of the journey you make mistakes, with time you start learning and becoming a better investor and learning what works better for you, but also learning about the market better, and so that by all means will result in better investments too. I also noticed that there is a lot of like beliefs. People think that investing altogether is risky in anything. There's many different ways to invest money, and everyone can choose a topic that is more interesting to them. It's just worth opening up, and then there's all these different possibilities now, even with NFT and crypto and a lot of other topics, except outside of stocks and investing in stock markets. And I think that it's a fabulous idea to begin playing a little bit with your money and with your future, you know and I'm sure that you believe the same. So tell me a little bit, like, what are the sort of biggest takeaways from your journey into investing and learning about those topics?
Yeah, definitely, because you made several very good points, right? It's definitely important to start first and foremost. And
Hmm.
some people are saying that it's not really worth it unless you have certain significant amount to put into the market, because obviously if you put, let's say, just a couple hundred of dollars into the market, even if you double it, it's just extra 100 $200.
Yeah.
But it's important to get that experience, right? Because
Mhm.
uh, it's also important. uh, Obviously it's important to have the knowledge, but it's also important to have in a sense the stomach for investing, right? Because
Yeah.
obviously it can be quite volatile. And for example, during 2020 there was this huge crash, basically, because of the whole pandemic
Mhm.
and everything. And just to be completely honest, right, it was quite gut wrenching, seeing my portfolio significantly down. But since at that point I was already relatively experienced, I didn't panic or anything. I just put more more money into the market, and like basically rode the whole wave, and it all turned out very fine. And one another beautiful thing about investing is that, in a sense, there is no one stopping you, right? There are no gatekeepers or anything. It's everything always in your own hands. You just simply need to create a brokerage account, put your money there, and then it's up to you to kind of learn, maybe make some mistakes, but learn from them and just continue. And I would say it's even better to like start with just a little bit of money, see how the market behaves, get used to it, and just let it compound, right? Because the opposite could be, maybe you have relatively significant amount of money, you put it there, then you see some volatility, you panic, you make some mistake with a significant amount of money, and that's not really good either, right? So we are always, like in Financial Fortress, right, the group that I'm helping to manage, we are basically always trying for our members to learn from those that are a couple of steps ahead, right? Because
Mhm.
uh, overall we are over 3,000 members. Over 500 of us has more than six figures invested, and over 100 of us more than seven figures, with basically a couple of coaches on top, like a licensed CPA, Coach Tom with 20 years of experience from credit card and banking industry, and similar other coaches. And basically the people, in a sense, below can learn from them and see what adjustments are they doing in their personal portfolio, because there are definitely many different strategies that you can use. So of course it can get relatively complex, but again, depending on how much time people want to spend with it, it's definitely something worth looking into.
Absolutely. And you mentioned that gut-wrenching feeling. It definitely has to do with managing emotions. And I think that this is when, when we refer to sort of being fearful of taking risks, financial risks, and things like that, it definitely puts your emotions to try when being exposed to market crashes or anything. And in fact, all investing has that aspect. Involves that aspect. There are certainly safer investments, but there are never 100% sure investments. So I think that a beautiful game overall is to get to learn more about yourself and learn to manage these emotions as well, and almost like manage that monkey brain that gets fearful when sees the numbers drop, when in reality, and historically, certainly with a lot of market crashes, there was then obviously a sort of a rebuild period, and a lot of times, certainly in the literature I read, people that invest money and rich people always say, oh, let's invest when everyone is fearful and everyone is making emotional decisions of selling out their investment. That's the time when you want to buy stocks and wait. And so, sort of the concept of winter is your season, and to not act emotionally in the same manner as everyone else who is fearful, and just looking into not looking far ahead, but seeing just the immediate happenings, on the charts, and becoming fearful of that. So certainly, I think that it's a great training for emotional intelligence to develop that muscle which eventually also contributes to being a better business person and more composed individual, because anything to do with money, making money on your own, especially when you start a business, it has to do with basically having to manage these emotional decisions. So I kind of see it personally as personal growth. Do you have any observations or experiences to share about that?
Yeah, I mean, it's business is obviously important, right? One of the it's applicable to every company in a sense, right? So obviously, since I've been investing for some time, I'm able to kind of read the balance sheet, income statement, look a little bit into finances of the company. And for example, when I was applying for like various architecture jobs, I was always looking into available information and seeing the balance sheet of the companies I am applying to.
Yes.
Uh, and also, just to connect it a little bit with architecture again, there are also lots of publicly traded, let's say, home builders, right? So when I was basically finishing my bachelor degree, I was just making this small presentation, that because basically at that point I was invested in Toll Brothers, which is one of the like American top tier home builders. So I just kind of sneaked into my presentation in the sixth semester. So that was a little bit, I guess, surprise for the teachers to see something like that, talking me about this company. Um, so yeah, it's definitely great to be able to have that overview how the business works, right? Because
Mhm.
you are able to see it from the other side as well, from like the employer's perspective in a sense. Um, because of course it's relatively tough to also lead an architecture company, right?
Mhm.
uh, it's like the construction as an industry, it's super complicated. There are so many stakeholders, and all the decision that the management is making, it's there is a lot of money on the line, a reputation obviously. So the industry we have chosen, it's no joke.
No, absolutely. And I think that it is a very, it's a good learning curve, to be able to recognize, for example, what financial statements are and how they look like and how to read them. There is a level of detail, and I think that devil is in the detail and in the numbers. And it's that aspect of business that perhaps we don't get like ready handed to us at school, at architecture school. So we have to learn it either through being in the position where we're exposed to these things, or by obtaining that knowledge on our own. And so this is really what kind of brings me back to the point of how valuable it is actually to explore topics of wanting to learn about finance on your own, because even if perhaps entrepreneurship or running your own business is not on the cards for you, understanding finance will help you as a person, as an individual, for your own future. And it doesn't necessarily mean that you have to build a business to become financial free, because you can do that by developing hobbies such as investing. Um, and look into ways in which you can generate your own passive income.
Yeah, definitely. And it's also interesting to see how, when you research a company that's not in the construction industry at all. Let's say I'm personally invested in Tesla, right, which is very innovative company, and they are doing lots of stuff differently, lots of like com- completely developing new principles. And very often the architecture companies are, I would say, very inefficient, right? And because I've definitely been part of many conversations when you are just kind of trying to come up with a booklet for the client, and you're just spending 1-2 hours discussing if this diagram should be in fuchsia or magenta. And there is no value in that, right? Because until the building is basically handed over to the client, it's all just an idea, which the ideas are kind of alpha and omega of the architecture, but until they are executed, there is not really much value created, right? So I would say architects really need to make sure that they are always aiming to that finish
Yeah.
line, because that's what in the end is the client paying for.
Absolutely. No, definitely. Well, thank you so much for joining me today to share about your passion and talk a little bit about investing. I think that it's an important topic, and I hope that this episode gives some perhaps motivation or inspiration for people to explore this. It certainly is a great way to develop financial freedom and develop a passive income. And yeah, so we're not going to be suggesting perhaps specifically the group where you work in. If someone is very interested, they can find you on LinkedIn. I don't want to solicit any specific investing ways. I do generally want to say that if people are interested in developing, you know, curiosity for investing, there is so many different things nowadays, with both crypto and stocks and NFTs and a lot of things that are actually also close to design and architecture and art, that might be maybe more visually pleasing as well as and find architects might find easier to relate to. So find your own investment. If you're interested, you can certainly read about different ways and find businesses that inspire you. A lot of architecture or tech businesses that are creating novator solutions, bringing them to the market. Something that is breaking the status quo and reinventing reality, VR, ER, a lot of new technologies out there, and certainly there is a great potential in that, and that definitely can be an interesting investment proposition. But I leave that to people to choose their hobby. But if they want to find out more about Audrey, I think LinkedIn is the best way to find you, right?
Yeah, definitely. Again, we are not financial advisors, right? Do your own
No.
research and educate yourself, but definitely start, right? Because that's the most important step. Like
Yeah.
basically, the best day to start investing was yesterday. The second best is today. So,
It's
just
true.
don't be afraid and do it. And thanks
Yeah,
for
and
having me.
don't Yeah, and don't be afraid to try, because I think that it's true that obviously it is a more risky way to manage your money, but it has a great potential also to develop financial freedom. So being afraid of something doesn't necessarily mean that that's the best decision you're making for yourself, in your future. Fear doesn't shouldn't stop you from exploring new things. So it's worth it to try, and I certainly think that it's a very responsible way to look into your future and invest in your future. So that's why also we bring this topic to you guys. So thank you so much for connecting with us, Audrey. Thank you for joining me on this talk, and wishing everyone a great evening, and I will see you all soon.
Thank you.
My cat just said goodbye too. Bye, everyone.